Hey guys, what's going on? Coming at you with a video today. It's Tuesday after the market. I'm actually shooting it the other way because I have a surprise for at least one hater to get my $1,000 today. So stay tuned for that part of the video, which is basically my portfolio returns that I don't want to do because I'm too lazy, but I'm going to do it to prove a point because I want $1,000. So anyways, so today in the market, basically the market opened up green. Well, the pre-market was green. Then right before it opened, it shot down red, rallied off the start, and then right before 10 a.m. Eastern time, basically the consumer sentiment numbers, they got released out and they were worse than expectation, basically. So the market sold off, freaked out, panicked. It's crazy that consumer sentiment's this low right now. Like, I don't understand. Like, the economy's doing fine. GDP's definitely positive right now. We have a lot of tailwinds ahead of us. The second the current administration cancels tariffs or it's a one-time fee or whatever, the Fed, Jerome Powell basically said in his meeting last week that he's going to react as needed. He obviously has a bunch of room to cut rates. So I don't understand why the sentiment's honestly this low. It's at 12-year lows right now, which is crazy to me. Like, I don't think it should be. I mean, yeah, it should be down a little bit because there's a lot of scary things. Inflation's high and might take a little longer to get down than what they hoped. I know Boston came out recently and said, he's one of the Fed guys, he came out and said that we won't see 2% inflation back until 2027. Whatever. It's really not a big deal if you think about it. I think it's going to come down a lot quicker. If you look like minus like eggs and stuff like that, which are such a small weight, I mean, the biggest weight to inflation is housing and obviously like job growth and stuff like that. But housing is a huge weight. Like rent and stuff like that, it really pulls up inflation, which has been getting, if anything, you could argue in most parts of the country that rent is actually staying the same or even maybe possibly going down a little. So when you have, 4% inflation right now and you have about even or less than that in rent, it's going to pull down inflation really quick and rapidly. So I don't see like car companies getting away with raising prices or like autos, and even insurance has been kind of like relatively flat as far as like auto insurance, homeowners insurance, stuff like that. It's up a little bit, but not like it was the past couple of years. So anyways, market kind of found its footing midday, fell back down. And then if you look right towards the end, you notice that Wall Street was really buying heavy the last hour of the market today. So what that tells me is they don't want to miss out, and they're kind of rebalancing and going back into the market in certain positions that they find important. One that I've been keeping my eye on is AMD. AMD almost hit 115 today, which is crazy. It was sitting sub 100 for a couple of weeks at this point. If you're watching my videos, I was buying the whole way. Still, in my opinion, a buy. It's still trading forward P. I think it's like 24 or something like that. I do think that that's on the lower side of my valuation. I do think it probably should trade at a 4P, depending on the growth rates and, net margins and all that. But I think a fair forward P for AMD is probably 30, 35. So it's still cheap. I wouldn't mind buying it up to like 140 per share. I do think it is going to go above like 160, 170. That's my base case this year. So obviously, hence a black swan event or like a recession or something like that. But obviously, that's going to lower everything. And then if you have cash on the sideline, that's really when you want to take advantage and buy the dip basically on the stocks you like. So did not do any buying today. Haven't actually done any buying this week. I do plan on buying something, probably just my weekly buy. I do a weekly buy every week no matter what, but I'm not going to buy like super aggressive. Just kind of what I put in every week is probably what I'm going to put in the market. So that's kind of my thoughts today. Nothing groundbreaking really happened. There wasn't like any, other than that, like, there was no really notable things to me that like made me want to do anything. Everything was kind of like, whatever. I did finish today up a little bit. I think I finished like 0.08% up. I think the S&P finished up like hardly like 0.005 or something like that. So it's kind of my thoughts. So the short one today, don't really have much to talk about. Just kind of continue my week, my normal buys. So I'm going to flip this camera around, get my $1,000. And if you guys like this video, make sure you subscribe. This is I'm actually going to show my year-to-date, my 1 year, and my 5 year return versus basically every indice. So I don't, to this person that's going to owe me $1,000, they're going to probably they're going to make up some crap or say, oh, you didn't show me this, you didn't show me that, you didn't show me the return on this, this, and that. So I'm just going to show the return on everything. So I'm going to flip it around, and here it is. So this is on my laptop. I'm not bullshitting. Here it is. So this is my account, the top one, obviously. Russell 2000, S&P, and NASDAQ, and then the Dow. So time frame, today is March 24, 2025. So I'm not taking anyone else's screenshot or any of that stuff. I took it online, or I took it from someone else's. Nope, this is year to date. This is today's date. So I'm down 1% this year. Russell is down 5%. S&P is down more than me, so I'm outperforming the S&P year to date. NASDAQ is down 5.66%. Oh, duh. Okay, it's the same thing. So yeah, there's year to date. Remember, I'm the top one. S&P is the third one. Year to date, -1. So I'm beating it. 1 year, 33.55%. So I am literally 3xing the S&P 500 in a 1 year. 3xing. That's not even close. Okay. Now here comes the 5 year. Get ready. Here's my $1,000. Oh no, 38% in 5 years? Wait, S&P's only 20%? That's almost a 2x. That's not even remotely close to underperforming the S&P 500. Mind you, that's a 5 year period. So I'm beating it by double for a 5 year consistent basis, which isn't even remotely close. So with that said, I will take my $1,000. Thank you.